doing well for itself today is Deepak Nitrite, and that is after another better than expected quarterly performance. The margins were higher as well. The phenolics business drove the top line growth. Upasana is joining in with the fine print of Deepak Nitrite. Upasana.
Well, it's certainly a strong beat versus the street estimates. The recovery was seen sequentially as well, despite the geopolitical tension, elevated prices, and even oversupply from China. Mind you, Q3 was a subdued quarter, but in Q4, certainly the recovery is seen. Now, growth was driven by company's key segment, that is phenolics, which saw 5% revenue growth, and margins also saw an uptick of as high as 150 basis points. Now, overall, if we talk about the margins expanded due to mainly favorable product mix of the company, and this came in spite of pricing headwinds seen across the portfolio. Now, company says that it is seeing an initial signs of recovery in demand for products related to dyes, pigments, home and personal care, and even select pharma application products. Now, coming to their numbers for Q4 on a consolidated basis, revenue saw an uptick of 2%, EBITDA saw an uptick of 5%, EBITDA margin stood as high as 14.5% with an uptick of 30 basis points, while Street was estimating somewhere around 9.7%. So a big beat on the margins, and PAT saw a downtick of 20% at 202 crore, while the Street was working with an estimate of somewhere around 110 crores. Now, coming to the segments, key segment, that is phenolics, as mentioned earlier, saw a revenue uptick of 5%, and margins here stood at 15.6% with an uptick of 150 basis points. And next one is advanced intermediates. This saw revenue downtick of 2%, a bit of a subdued performance here because of the low volume is what the company has indicated, and margins here stood low at 7% versus 20% on a Y-on-Y basis. So overall, good set of numbers from Deepak Nitrite.
Overall, good set of numbers. We'll be waiting for those con call highlights that will be starting at 12 noon right now as well. So keep an eye on that. But let's move